NIO stock ended Thursday's trading session with a strong move higher, closing at $7.89 per share. That's a gain of 24 cents, or just over 3% on the day. What makes today's action interesting isn't just the percentage gain but where it happened. For weeks NIO has been trading between a solid floor around $7 and a stubborn ceiling around $7.50 to $8. Each attempt to break through resistance has been met with selling, and each dip toward support has been met with buyers. Today's close at 789 inches the stock right back up against that ceiling and invites the question, is this finally the breakout that bulls have been waiting for? To understand the significance of Thursday's move we have to rewind a bit. NIO came into this week having defended $7 repeatedly. It had strong days Tuesday and Wednesday, bouncing from the low 7s and pushing toward the upper 7s. On Wednesday it opened as high as 790 before drifting into a flat range. That kind of action, opening strong, then fading, is often a sign of consolidation. Traders are taking profits, new buyers are feeling cautious, and everyone's waiting for a catalyst. Coming into Thursday, the stock was poised either to roll over again or to mount another attempt at resistance. It chose the latter, gaining 3% and closing just shy of the psychologically important $8 mark. Why the renewed strength? A few factors lined up. First, momentum. After multiple tests of the upper range, NIO's chart has been forming a series of higher lows. Technical traders see that as a sign of accumulation. They'll buy ahead of a possible breakout, hoping to catch the early stages. When enough of them act together, that buying pressure can create the very breakout they're anticipating. It's a self-reinforcing loop that can be particularly powerful in a stock with an active retail following like NIO. Today's gain looks like one of those days when technical and momentum buyers took the initiative. Second, fundamentals are providing a supportive backdrop. We've had a string of positive delivery headlines. NIO delivered 34,749 vehicles in September, bringing its third quarter total to 87,071, up 41% from the same quarter a year ago. Those are record numbers. They show that, despite intense competition in China's EV market and ongoing price wars, NIO is still growing its volumes at a healthy clip. For investors worried about whether the company could maintain demand for its new ES8 SUV and other models, these figures are reassuring. They also help justify a more constructive view of the stock at current levels. A technical setup without fundamentals is just a chart pattern. A technical setup with fundamentals is a story. Third, the analyst community has started to lean a little more positive on NIO. UBS recently raised its price target to $8.50 and flagged the company for near-term upside. Other brokers have pointed to improving delivery momentum and the potential benefits of NIO's sub-brands Onvo and Firefly. While upgrades like this aren't necessarily new, their influence can linger. They provide institutional investors cover to accumulate shares and they catch the eye of retail traders scanning headlines for catalysts. When an upgrade coincides with a stock testing resistance, it can act as the nudge that tips the balance. Fourth, and perhaps most interestingly, the regulatory backdrop is evolving in a way that could favor NIO. China's new export permit system for electric vehicles, set to start in 2026, initially sounded like more bureaucracy. Companies will need authorized partners and government approval to sell EVs abroad. But the stated purpose of the permits is to safeguard China's brand image overseas by ensuring only high-quality products make it out. For a premium player like NIO, that can be an advantage. It levels the playing field by filtering out low-cost, low-quality competitors that might otherwise flood foreign markets and tarnish the reputation of Chinese EVs. It also gives NIO and its peers a clearer regulatory roadmap for planning their overseas expansion. Knowing the rules ahead of time is always better than waiting for ad hoc policy changes. This matters because NIO's long-term growth story depends on expanding beyond China. Europe is already on the map, and other regions are in its sights. The company has said it aims to enter 16 export markets with its Onvo and Firefly sub-brands. A formal export permit system gives it a predictable framework for doing that. It's not just a hoop to jump through, it's a stamp of quality that can reassure partners and consumers. For investors, that shifts the narrative from regulatory risk to regulatory moat. That kind of shift doesn't move the stock in a straight line, but it creates an underlying sense of confidence that can show up in price action when combined with positive fundamentals. There's also the dynamic of short interest. NIO still has a substantial base of short sellers, around 9% of its float, nearly 200 million shares. The days-to-cover ratio is roughly 2.8. Over the past month, short interest has ticked down slightly, suggesting some covering has already happened. When a stock with a large short base starts to climb toward resistance, shorts have to make decisions. Do they add to positions, betting the ceiling will hold? Or do they cover, reducing risk of a squeeze? If enough of them choose to cover at once, it creates extra buying pressure that accelerates the move. We can't say for certain without real-time data that this is what happened today, but the conditions were ripe for it. Strong delivery news, analyst upgrades, a chart pressing on resistance, and a heavy short base. So Thursday's 3% gain isn't just random noise. It's part of a pattern: higher lows, repeated tests of resistance, stronger fundamentals, a regulatory environment shifting from headwind to potential tailwind, and a short base that could fuel further upside. The question now is whether NIO can sustain this momentum and break cleanly above $8. That's the next psychological and technical hurdle. A close above 8 with strong volume would be a meaningful event. It would signal that the ceiling at 750 to 790 has finally cracked. It could also trigger more shorts to cover, adding fuel to a rally that might carry the stock to 850 or higher. At the same time, investors need to stay grounded. Resistance is called resistance for a reason. If NIO fails again near 8 and slides back towards 750 or 7, the range trade continues. Price wars in China remain intense. Execution risk on deliveries and margins is still real. The export permit system is still 2 years away from implementation. These are not trivial factors. But the combination of technical strength, delivery momentum, analyst support, and a clearer regulatory path makes a measured optimism reasonable. For a Thursday aftermarket video, you can frame the story as NIO breaks to $7.89, is resistance finally falling? That headline captures both the price action and the bigger question on investors' minds. In the video, walk viewers through the recent trading pattern: support at 7, repeated tests of the upper 7s, today's close just shy of 8. Explain the drivers: record deliveries, UBS upgrade, export permit opportunity, and the potential for short covering. Then lay out the scenarios. If NIO can hold above 780 and break 8 with volume, the breakout narrative gains strength. If not, the consolidation continues. Either way, you're giving your audience levels to watch, context for the news, and a balanced but hopeful outlook. You might say something like, today NIO closed at $7.89, up just over 3%. That puts the stock right back at the top of its recent range. With record deliveries, analyst upgrades, and a new export permit framework that could favor quality EV makers, the stage is set for a potential breakout. But resistance at $8 is still strong. In this video we'll look at what's driving the move, what it would take to break out, and what investors should watch next. That kind of framing signals that you're not just reacting to the day's number but thinking about the bigger picture. It's also worth highlighting the contrast between NIO and some of its peers. Tesla sales in China haven't been growing at the same pace, according to recent reports. XPeng, BYD, and even Xiaomi are all competing hard, but NIO is carving out a niche with its premium positioning and battery swap network. In a more regulated export environment, that differentiation could matter even more. Viewers who follow multiple EV stocks will appreciate hearing where NIO stands relative to its competition. In closing, Thursday's session was another sign that the bulls aren't giving up. The stock has clawed back from its lows, defended $7 repeatedly, and is now pressing on the upper limit of its range. Deliveries are strong, the regulatory framework for exports could turn into a moat, and analyst support adds credibility. Short sellers may be feeling the heat. None of this guarantees a breakout, but it sets the stage for one. As always, the next few sessions will tell the tale. Will NIO finally clear $8 and start a new leg higher, or will it get rejected again and slide back into the range? Either way, knowing the context behind today's move will help you make sense of what happens next.